Hello again. Welcome to the week ahead with Alpha Wave Trader. I thought we'd stick with the S&P for the moment because things are so interesting with what's going on, and I'd follow on from our conversation last week and give you a few levels to keep your eye on going over this coming period, because things could become pretty interesting going forward. When I spoke to you at the start of last week, we noted the weekly sell pivot, which was the first weekly sell pivot since markets took off a few months ago. And we've had a false break of the highs of the whole range for the last few years. And I've shown you all of those levels, and we'll show you them again in a minute. But to analyze what happened last week, you'll remember I said we should see a correction, and the market will probably bounce from this zone, is what I said at the end of the update last week. And the reason I said that was analysing this wave higher. And you can see I've got the buy zone just there. Sorry about that. And the sell zone up the top. And those levels being the 75 to 87.5% retracement, and up here that is the 12.5 to 25%, and we've got the point of control there, that little blue line. So last week you can see the sell-off was very sharp, but then it hit the buy zone of the wave, and we've had a very sharp reversal off there. And the other thing to note as well, now this is the weekly chart. You'll see I've got the Bollinger Bands based on the 20-week simple moving average. So we have the 1 standard and 2 standard deviation Bollinger Band below that level. And you can see prices also hitting that 2 standard deviation below and finding support, which is what you see over and over again. You'll see the same thing happening all the way through the rally. That's where you get the reversals from if the trend is going to continue. So looking at it from that point of view, if we just analyze this big uptrend, you'll see that the actual wave structure is still in an uptrend. So that's the big picture point of view, is that we need to break below that low to really change things in the big picture. And that level is 27.28 in the E-mini S&P 500, and below there it does get pretty dangerous and prices can turn down pretty rapidly. Until then, we could be looking at a continuation of the trend. So busting out above these highs again, watch out. If prices do manage to just turn back up and head above 3,050, it could be off to the races to the upside, because that would mean that this whole distribution of the past few years could be ending, and it's blue sky above there. So if you are going to trade this from the short side, you really do need to be running away from any positions above those all-time highs. And I'd say, above 30.50 is a point where you're really running away from any shorts. But until then, while we have this weekly sell pivot as the most recent sell pivot, I'm still looking at this as possibly heading down. And the interesting points to watch is the sell zone of the wave. So that area is about 29.50 up to, let's say, 29.90. So a sharp squeeze early in the week up into that zone, and then a sell pivot, let's say on the daily. I'm getting very interested for a potential sell-off again. So that would see a spike into the buy zone, then the rally into the sell zone of the wave, and then the next leg down. And that next leg, well, it could turn into quite a nasty one, because there are a lot of dominoes set up beneath the market now with these recent lows. And also if we look at this whole structure, which I've shown you before, which is a large widening distribution, the midpoint of that is all important. So just to quickly show you that, we have the point of control of that whole range, this initial wave to the downside, is at 2700, and that has informed the trading ever since. You can see prices getting rejected from the buy and sell zones within that range, which happens so often. But then we've had the big false breaks that you have, and you can see getting down to the 618 below, 0.618, so that's 61.8% below the width of this whole range, and that's a really important point. You can see prices rocketing from that level. But the key area is that, 25% to 618 above. That's the area where you get the reversals from. That's where you've got to be watching out for prices to possibly turn back up towards that point of control. And you can see on this upside, prices sitting for a month in that zone, and then we got hit 2 weeks ago, created the weekly sell pivot, which really was the starting gun for that momentum shift, and we've seen the initial wave down. But as markets always love to do, they like to whip out any of the new traders. So once that range is created, we see the rally back, towards the sell zone of that wave down, which takes all of those new traders who tried to get short out of their position before finally turning back down again. And this is why it's now such an interesting thing to watch, because this next wave down is the one that can really accelerate. Because if we start heading below those two lows there, around 2750 odd, that's when the dominoes of stop losses start going off, and we'll head back to that point of control. And who knows what can happen there. If there's big buying support, it will bounce off there and we could really take off. But also, if there isn't, and it fails to hold that level, it can really turn back down. And the way you'd analyze that is to look at this whole wave up, and if it failed, well, you're getting targets back to the buy zone of that whole wave, which would be the 75 to 87% retracement. So that ultimately could be the target on this move to the downside, down around 2500, which is a long way down. We're not there yet, and the weekly trend hasn't shifted quite yet, but the signs are there. And until we get a weekly buy pivot, you really have to be on tenterhooks watching this market where it can turn back down rapidly. And for me this week, the key areas I'm watching is that 29.50 to 29.90 area. And if we get the daily sell pivot in there, I'm starting to get very interested in looking for shorting opportunities. But you do have to wait for that sell pivot, because if prices don't have a daily sell pivot and they just keep trading up through that level, that's when you're looking at the breakout and prices could really take off. So that's another reason why waiting for that indication of a shift in momentum is so important, is that once it hits up in that sell zone area and then creates the daily sell pivot, that's when you're saying, okay, the momentum is shifting to the downside in a very dangerous zone for the market, where it can accelerate from there to the downside. So it's a very interesting scenario. So I thought I'd lay it all out for you so we can follow it along in future. All right, cheers. I'll come back with more next week.